content. Subscribe and get free vouchers.
Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. And it's a Wednesday morning and the markets, they continue on their path of recovery. Now the gains this morning, they are small, but if you look at it, that has been the theme of this market in this recovery. Now small and negative movements at open, but we build on from there. That said, we are approaching what we feel could be some key hurdle for Nifty. But before we get into all that, as always, let's begin with a quick check on markets across the globe. Amit, over to you.
Good morning, Suyash. The PPI, the Producer Price Index, was out. It has topped market estimates. It rose 2.2% on an yearly basis. Core PPI rose, which is a favorite of the Fed, also rose 2.4%. As a reaction, the dollar strengthened and it is green everywhere in the West. Hang Seng is closed today due to a holiday. Dow Jones closed in the positive at 0.32%. S&P 500 in the positive at 0.48%. Nasdaq Composite in the positive at 0.75%. Rally is expected to continue. Stock 600 closed in the positive at 0.15%. Nikkei this morning is in the positive at 0.41%. Green everywhere. Individual stocks also, whether it's Nvidia or Apple, they're all in the green today.
All right, and US markets did dodge the stronger than expected PPI data that came in for the month of April. And as we know, the good news in on economy front in the US now is considered bad news for the market, simply because you can't cut rates in an economy that is already running hot, right? As it would further lead to more inflation. I think instead of that, the market chose to pay close attention to what Mr. Powell had to say. According to him, PPI data was mixed, not strong, and he also reiterated that the first course of action for the Federal Reserve will be a rate cut and not a rate hike, and that is pretty much out of the question. So I think that is why we are seeing a very strong pullback in the markets across the globe, especially in the US markets. Now, when the PPI data came out, bond yields in the US, they picked up by about 5 basis points or so, but by the end of it, they actually settled 5 basis points lower. They are currently hovering at about 4.44%. The dollar index has also fallen below that 105 mark, and crude prices, they are pretty much hovering around that $83 a barrel. So a very strong setup as far as the global markets are concerned. Even this morning, the markets again, they have opened in the green. Nifty has opened about 0.2% higher, it at around 22,250 levels. But if you remember, yesterday we had pointed out that 22,270 to 22,320 is where multiple moving averages lie. So that could be a key resistance zone for the market. Your 20-day moving averages plays there. The 40-day exponential moving average is there, the 50 DMA is there, and also the 50% retracement level of this entire fall from record high of about 22,794 to the recent low, the recent swing low of 21,821. The 50% retracement is also in that zone, and we are just hovering below that. We are about 20 points away from that 50-point range. So I think that could be a litmus test for Nifty. But again, remember, it's not just our markets that are reacting to global cues. And I think the biggest global cue we forgot to talk about was the US CPI print that will come out, and that will dictate the market flow and the sentiment. So typically what we have seen in the past few months is that ahead of CPI data, the market would sort of correct and expect worse, and inflation has come in hotter in the last 5 or 6 prints. So it makes all the more sense, but this has not been the case this time around. The expectation is that US CPI will increase by about 0.3% month on month. So that is a major trigger for us to track this morning. Also, today is the expiry for Bank Nifty contracts, and tomorrow is the weekly FNO expiry for Nifty contracts. So volatility will be there, considering that the markets have moved moved quite sharply. I mean, in the entire last week, we saw about a 1,000 point crash, and in the last 3 days, we have recovered close to 400 points. So the market movement has been choppy on both sides. Also, now joining us on the show is Soni Patnaik of JM Financial. Soni, thank you for giving us time here on News 9. Nifty, before you joined on the show, we were discussing the remarkable recovery we have seen in the index. 400 points from the recent swing low, but we are again approaching some key moving averages. The 20-day, 50-day, 40 DMA, all are placed around that 22,270 to 22,320 zone. As we are placed right now, I mean, is there enough strength in the index to breach past it? Also, what happens if we don't?
Hey, good morning, Suyash. Thank you for having me on the show. I think rightly put, technical derivatives, all data is indicating that 22,300 plus minus 30 points you can keep is a resistance zone. And if it's able to cross the level, you can see short covering in Nifty towards 20,500, 20,600 coming in the coming days. So I think it will be quite important for Nifty to just see if it can cross those levels. Of course, if we look at the heavyweights today, Reliance is on day high, it is supporting Nifty. IT has also turned around, it's giving momentum. So these are some of these sectors that are giving the support to Nifty to be able to cross those resistance level and see a higher side to above 22,300. I think that's going to be quite important today and tomorrow. Both the days Nifty may be able to cross the resistance level. On the downside, multiple support levels, but the important one that to remember for the day would be 22,200, 22,100. These are the levels for the intraday that can work as a good support. Of course, for a medium term basis, 22,000 still holds as a good support. So I think that's how we'll have to look in for the levels for Nifty.
All right, and between the two indices, Bank Nifty and Nifty, Bank Nifty has underperformed in this recovery. 48,000 is still to be recovered. What's your take on the banking index? Again, a slow mover the index has been. Will we continue to see that in the banking index?
I think Bank Nifty day before yesterday was the one that actually outperformed and pulled Nifty out of the woods. When Nifty broke 22,000 level, it was Bank Nifty that showed strength, and that's how it performs. Just one day you see a good recovery in Bank Nifty, then the next 2 to 3 days it just sits silent. However, today it is very important. Bank Nifty has a weekly expiry today. If it's able to cross the resistance of 48,000 for the day, you can see a good short covering towards 48,400, 48,500 level can also be seen. I think it's very important. The weekly expiry may hold some support. There is yet to be seen any heavyweight banks just come to the rescue for the index as of now. But perhaps in the second half with the expiry move, it may be just able to cross those resistance and see the short covering.
Good morning, Soni. Bharti Airtel announced their results yesterday and their net profits went down 31% despite the fact that they added 7.8 million smartphone customers. Their average revenue per user went up to rupees 209, up from 193 rupees year on year. The stock has given close to 60% returns over the last 1 year, but is it the crunch in margins because of the competition that is basically having its stress on the net profits? And what do you make of the stock?
The Bharti Airtel, it did cross the resistance of 1310 by just hardly 3 odd points, but it's not able to sustain. So technically, that resistance is still intact. Only if it's able to cross the level, if it's able to close above that, you can see it retesting its higher highs of 1350, 1360 levels. I think that's quite important. On the downside, 1290, 1280 zone should have a good support. Hopefully, if it's not able to break these support levels, it may remain in this range. But of course, for any fresh upside, you'll have to wait for the 1320 resistance to cross.
All right, that's a call on Bharti Airtel. But another stock on our radar, Sony, this morning is Adani Enterprises. The stock has been on a phenomenal run, rallying close to 13% in the last 3-4 sessions. Now, this is in comparison to Nifty's 2% or so surge. The volumes are strong as well. What's your take on Adani Enterprises? I mean, we are in the election season as well. Is that a stock that one could look at for the next maybe couple of months?
Technically, Adani has given a good breakout. Yesterday itself, it closed above 3,000. That was the first indication. Of course, the stock is looking good on charts. It can test 30 to 50 levels from current level. And, it may just continue to show that momentum. Keeping a stop loss of maybe 29.80 from current levels should be enough, and, it can just head towards 3,200, 3,250.
Sony, before we let you go, what are the recommendations you have for our investors today?
The first pick would be from the IT space. Like I mentioned, it will be Wipro. So I think, we're just looking around and seeing that there's a small resistance of 460 level on Wipro. So it becomes a conditional buy. If it's able to cross the level of 460 for the day, you can buy only above 460 for targets of 480, 485, keeping a stop loss of 445. So it will be a conditional buy from current levels. Just wait and watch for the resistance to cross. The second stock would be in Balkrishna Industries. We've seen the stock give a good breakout yesterday above 2,500. It's a bit muted and decent for now, and the stock has given a good intraday breakout as well. So I think if it's able to cross 2,520 resistance, the stock can head towards 2,600. So this also becomes a good conditional buy. If it's crossing 2,520, keep a target of 2,600 and a stop loss of 2,460 only then.
Alright, those are the top stock calls from Soni Patnaik, Balkrishna Industries and Wipro on her radar for the short term. Thank you, ma'am, for giving us time here on News 9. Always a pleasure speaking with you.
Thank you.
But let's look at how the markets are doing, because the recovery has once again begun and we are in that range that we had been talking about, 22,270 to 22,320. Again, multiple moving averages are in that zone, your 20-day moving average, your 50-day moving average, the 40-day exponential moving average, as well as a 50% retracement level of this entire fall, this entire 1,000 point fall we saw from the recent drop. We are currently placed at around 22,280 as we speak. We are moving higher. Nifty opened at around 22,250 odd levels, but again, the market, as you know, in the last couple of sessions at least, we have seen that the start will be rather slow and or even negative, but the market would build on from there. Remember what happened on Monday. I mean, the market went on to make a swing low of 22,821, and from there on we saw almost a 300-point recovery, where the index also managed to end in the green. So that after that, we we had mentioned on the show as well that there is a formation of a hammer pattern, which is a very strong reversal pattern if it forms on the in a downtrend, and for us to confirm that this pattern is actually playing out, one needs to see follow-on buying, and that is what exactly happened on Tuesday. Nifty managed to jump about another 150 odd points. Now, it did slip about 50 points from the intraday high, and I mean, that is nitpicking pretty much, but remember, the momentum has been strong in the morning. I mean, the momentum, usually the markets have begun on a muted note, but from there we build on. Can we continue to see this recovery? I think successful takeout of 22,300 could perhaps give us some cues, but I'm also looking at Nifty Bank this morning, and that is not really supporting in the markets, because even Sony pointed out on Monday most of this recovery was the Nifty Bank played a major part in this recovery that we saw in Nifty, but this morning Nifty Bank is still hovering at that below that 48,000 mark. That has been again a crucial resistance zone for the index, and 48,000 to 48,200, again that is where the multiple moving averages for the banking indexes as well. So if we see a reversal in the banking pack on the whole, that could perhaps lead to some bit of a correction, but I guess more than anything, Amit, at this point, considering the election related volatility, the market or the participants would be at least hoping for perhaps some bit of a sideway movement with intermittent bounces, because remember, we are in the election season. There is a lot of uncertainty in the system. India VIX has skyrocketed, and that indicates that the volatility is it's making markets nervous.
Hopefully the major part of the choppiness will be behind us by the end of the next phase.
Right.
As we go closer and closer to the end of elections, the choppiness, basically the big ups and downs, will be behind us, and we are already close to the fifth phase.
Right.
So that is the good news.
Right.
And as you said, the sideways thing will start coming into play.
Right, absolutely a great point made by Amit. 370 seats have already gone to poll, and we are approaching the fag end of the election season. So perhaps we will see that dip in volatility. Remember, yesterday India VIX did break out of that 13-day winning streak, and slipped about 2%. What happens? Let's talk about that in further detail. But for now, it's time to take a short break.
I don't think anybody has isolated Ajit Dada Pawar. Ajit Dada has isolated himself.
That led to a lot of bad blood between the ruling partners.
It is not true. You know it very well, who these elements are, who these individuals are. And these are the very reasons why you see a division in the party. Now this contest between Supriya Sule and Sunetra Pawar is really a proxy war between uncle and nephew, and it's being fought in the family bastion of Baramati.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
There's a new video around what deepfake can do.
We had seen a trailer of this a few days back.
Rumors should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
Forever there are simultaneous election of parliament, assembly and municipality and panchayat. So that framework has to be given in the constitution. That amendment has been suggested.
Are you going to take away the power of dissolution?
I mean, it doesn't require any rocket science to do this. It's a simple constitutional amendment, and the idea is everything goes together.
The Law Commission has set the ball rolling for one nation, one election. Basically, if all goes well, then India may see simultaneous elections to Lok Sabha, state assemblies, municipalities and panchayats in 2029.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Has Allu Arjun arrived, or he's just taking off?
If I really want to hit a moonshot, I want the moon.
These are big stories.
It's very unique to Indian cinema.
What would be the relevance of tradition?
I would believe that the first change has to come in the mind.
World premiere on the 18th of May, only on News 9 Live at 9 p.m.
Welcome back. You're watching First Stick here on News 9, and before we jumped into the break, we were talking about the multiple factors that are at play and that are, kind of causing this push and pull in the market. It's the election season. We are in the midst of the earnings season as well, and the CPI data for the month of April in the US will also come out today. So plenty of factors for us to worry about. But again, in this recovery, this 450 point odd recovery that we have seen in Nifty, we have been constantly saying that 22,300 odd levels plus 20 minus 20 will be a resistance zone. We are right at that level. Nifty is up 0.3% as we speak at that 22,293 mark, just sitting 7 points below that 22,300 odd levels, whereas Sensex is up 0.2% at 73,245 mark. The recovery in broader markets has been rather strong. They pretty much had a field day yesterday. Both indices surged about 1.5 to 2%, and today, this morning, they are building onto it. The mid-cap index is moving closer to that 51,000 mark. It's up around 1% at 50,727, and the small cap index is up over 1% as well, and it's currently hovering above the 16,500 mark, and that has really improved the overall breadth of the market. Remember, in this correction that we saw, the advanced decline ratio was heavily in the favor of the bears. Yesterday, the advanced decline ratio was a much reasonable 1:3, meaning 3:1, meaning 3 stocks advanced for 1 that declined. Even this morning, it's at about 3.5 to 1. Similarly, again, the similar implications that the broader market is also, participating in that upside, and more stocks are rallying than they are falling. India VIX this morning, again, remember before we slipped into the break, we were talking about how India VIX snapped out of its 13-day winning run, where it essentially doubled from 10 odd levels to about 20. And it snapped out of it. It fell about 2% or so, and even this morning it is down by about 1.2%, and it is now back below the 20 mark. But again, historically speaking, 20 levels are elevated. Typically what happens is that 15% mark is your threshold. If the number is above 15 in Indian markets for India VIX, the volatility index, it's typically considered that there is excess caution in the system, whereas whenever the figure is below 15, the market, one assumes that the market is going to be more stable and calm. But again, we are, there are multiple binary events at play. We were talking about local factors. Let's not forget the global factors at play as well. There are 2 or 3 conflicts around the world that are going on. We are witnessing some trade tensions as well, and again, the situation in US remains concerning. Economy is running hot, inflation is going up, interest rates can't be cut, and that is really affecting your average American, because the mortgage prices have shot up, and they have shot up like we have not seen in the past 20 years or so. So that could be a major pain point for the market. But again, the commentary coming out from the central banks is that at least for now, as things stand, the first course of action would be a rate cut. For now, the interest rates are going to be higher for longer, and essentially all talks of a rate hike this year have been quashed. But we will also like to see what RBI does next, because so the situation is in the US is difficult. Again, we were talking about economy running hot and inflation also going up, whereas in India, economy is doing well and inflation is coming off nicely. Food inflation remains a concern. Even this time around in the April CPI print, we saw that while we saw retail inflation on the whole falling an 11-month low, your food prices, especially the vegetable and pulse inflation, was quite significant. Vegetable inflation, if I remember correctly, was at about 27% on a year-on-year basis, whereas pulses inflation was at about 16%. But remember, SkyMet and IMD have come out and said that we expect a normal monsoon this time around. So that could perhaps, alleviate some of that pain. And if we see or witness a normal monsoon, that could also, douse some of that inflationary pressures that are coming in food prices. Joining us on the show now is Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Amar, thank you for joining us here on News 9. Tremendous recovery that we have seen in the past 3-4 sessions. On Monday, we saw a big 280 point swing, followed by follow-on buying on Tuesday. Safe to say that the worst is over, or do you think that this recovery is just that, a dead cat bounce?
Yeah, I would say, if you ask me, I wouldn't say it's a dead cat bounce, but yes, one thing is very clear that we are seeing consolidation in the markets, and markets are pricing in the various scenarios which could play out post the election results. So that is very clear. And also, if we look at the India VIX, so that also continues to remain at elevated levels. So anything above 16, 18 is, I would say, cause of concern. And currently it's around 20 plus, which is, I would say, the highest level since October 22. So what that tells me is that markets have factored in, but yes, markets at the same time are cautious. Also, if you look at the FIIs, the selling has been continuing. So markets, and also I would say the smart money investors, they are all looking at basically keeping a close watch and having light positions as compared to really going all out. And if you ask me, technically, markets are clearly displaying that it's a sideways and consolidation zone. If you ask me about Nifty on the upside, 22,300, 22,400, that's a zone of resistance. Downside, now one thing is very clear that 21,700, 800 is very crucial support zone. If that is taken out in any way for whatever be the reasons, it could be domestic, it could be international, then we could witness some real sharp correction in the markets. Otherwise, we could see some consolidation. Also, the heavyweights are more or less, I would say, mixed. So in terms of, I would say, Reliance, in terms of IT stocks, in terms of banking stocks, HDFC, ICICI. So we are seeing mixed trends there. That's the reason we are seeing this sort of consolidation. Also, advances are comparatively better placed as compared to declines today. So, but that's too early to read into it. But overall, I would say higher levels would be sold into the markets.
All right, and sir, one of the points that you made, I mean, FIIs have been selling incessantly. They have pulled out close to $3 billion worth of equity from Indian markets between May 3 and May 14th actually. Whereas DII, I mean, your domestic institutional buyers have pretty much offset all the exodus of foreign moolah that we saw. What explains that? What's giving them confidence? What's giving confidence to our mutual fund industry that, the long-term story of India, election aside, is still going to be, strong?
So we have to understand that FIIs, I have not said they are fair weather friends, but they definitely look at opportunities across the globe. So because they are spread out across the globe, they have access to hundreds of markets across the globe. So they'll look out at all the opportunities which are there, because ultimately it's the investors' money which they are really looking at. So they'll see where they can generate better alpha as compared to India. And China definitely seems to be a better bet for many of the FIIs, given the way Chinese markets have cracked. So that's definitely helping them. And as far as our domestic institutions are concerned, they have nowhere else to go but the Indian markets. So they have to stay invested. If you look at mutual funds, as per regulations also, they can't sit on cash. So they'll have to stay invested. So having said that, they'll definitely look at investing in stocks where you see a lot of opportunity. And at the same time, you have to understand that markets are the way they are, and we could witness some corrections also in the markets, which we recently witnessed sharp corrections. So domestic institutions, they would like to stay invested and they would like to look at opportunities. But yes, you are right that in the current scenario, spotting opportunities is not easy as compared to maybe 6 months or 1 year prior. So that's a challenge that fund managers are definitely facing.
All right, and great point that you made there, sir. I mean, it could be a tactical positioning by FIIs instead of them really questioning the strength of the Indian economy. And I mean, it's the game of what's the cheapest, right? If China is available at a PE of 9.5 versus India, where we are trading at a PE of about 25, it makes all the more sense to, buy the market which is cheaper and sell the market, which is expensive. But on that note, let's take a short break. But please stay with us, Amar. We have plenty more to discuss with you on the other side.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
That ink is a semi-permanent dye called the indelible ink.
We are the sole manufacturer of this indelible ink.
Don't try to repair something which is working.
And if you have facial recognition, you can go vote in any booth anywhere based on where you are, and then it will be recorded that you can't vote anywhere else again.
Can we retire indelible ink and use biometrics? Theoretically, my answer would be yes.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9. Before we slipped into the break, we were talking about the markets and the run-up that they are on before the elections. We have turned jittery. We have seen some bit of correction in the market, and followed by 2 days, 3 days worth of pullback. But Amit, we often in this conversation of what the market will do before the elections, during the elections, we often forget about what happens after the elections. What do you think are the challenges that the market and the government will face post-elections, June 4th, when the results come out?
Yeah, so like you rightly said, we have been talking about performances in the last 5 years, choppiness going up to the elections results. Looking at the crystal ball, and let's hope we can look at, on the 5th of June, there will be a new government and there will be a new sets of challenges. There will still be the oil prices, there will still be the Fed rate hikes that the world is looking towards. Bond inclusion will be a good thing that will happen to India. Market volatility, what will happen to that? Which are the sectors? Everybody looks towards infrastructure, but which are the sectors that will be in focus? Amar, I'll put that question to you. What are the biggest challenges that the government may have to face on the 5th of June, whichever government takes oath? And which are the sectors that would be the primary focus in the markets?
Yeah, so if you look at, definitely markets have high expectations from the government, and also because now we are at a cusp of major transformation as far as India is concerned. Because if we look at our automobile sector, that's doing phenomenally well. If you look at our banking sector, that's left the past, I would say, history of NPAs that's behind, be it the private sector bank or the public sector bank. If you look at the power generation companies, if you look at the defense sector, and also FMCG to a certain extent, consumer goods. So many of these sectors are bound to grow significantly beyond our wildest of imaginations over the next 5 to 10 years. So it becomes very imperative and important that the government of the day is really looking at how to meet up to the expectations of the market participants. And also, I would say that these are some sectors which one can definitely look at. Defense is a very promising sector. Power generation and renewable energy, again, very promising sector. Automobile, very promising sector. But at the same time, one needs to bear in mind that the sectors could be very promising, the companies could be very promising, but at what price are you willing to buy? Because ultimately, any investor who's putting in money, his or her objective is to generate returns. So at what level one is looking at to buy? Because the PE, if you look at many of the stocks, they are at significantly elevated levels as well. But expectations definitely would run high, and if the incumbent government comes back to power, I would say they'll have a tough job at their hand.
Tall task ahead for the new government that comes into power come June, but we'll shift focus to the primary markets because they are buzzing this morning. And as we speak, TBO Tech has made a stellar debut on bourses, listing at rupees 1426 per share on both NSE and BSE versus the issue price of rupees 920 rupees per share. Now this is about 55% higher from what the market was expecting, and the listing gains are about 55% higher, and the market, I think, was factoring in a premium of about 45% to 55%. On the other hand, Aadhar Housing Finance listing has been a slumper. It has listed on a flattish note, I mean absolutely flat, zero premium at 315 rupees per share, and looking at the grey market premium and in the unlisted market, it suggested that the premium could be in the range of about 10 to 15%. Amar, I'll come to you. Between two, TBO Tech, Aadhar Finance, Housing Finance. TBO Tech, I mean, stellar listing in a market like this, which is choppy. Aadhar, no listing gains. Which of these two would you hold for the long or maybe medium term?
If you ask me, I really don't track these two stocks, so I really wouldn't be in a position to comment on.
All right, apart from Aadhar and TBO Tech, Go Digit, the initial public offering of Anushka Sharma backed and Virat Kohli backed Go Digit General Insurance has opened for subscription today. Now, the Bengaluru based company in its DRHP, disclosed that it may not be able to maintain profitability in the near future, and this is because its loss reserves are based on estimates as to future claim liabilities, and if they prove inadequate, it could lead to further increase in reserves and thereby hit the profitability. However, this doesn't seem to be bothering the markets. Go Digit's share are commanding a healthy premium of about 55 rupees in the unlisted market, indicating a potential upside of about 20%. Now, Amar, I'll come to you. Any recommendation on Go Digit? Is this the one to subscribe, or will you give it a pass?
I would say that we'd rather wait for this, because we'll have to see how actually the company performs. So I would rather wait for this.
All right, would like to see how the company performs, maybe give it a pass at this point in time. Again, the listing, at least the premium, at least what the grey market is suggesting, they are expecting about 18% upside over the IPO price, but we leave it at that. Amar Deo Singh, sir, thank you for joining us here on News 9. Always great insights from you.
Thank you for having me.
But before we wrap things up, let's look at what levels the market are currently trading at, because we are seeing some bit of a pullback this morning, and again, I mean, it has played out to the teeth, right? What we had predicted, I mean, 22,300 could be a tipping point for the Nifty. Again, it was going to be a litmus test because of multiple key moving averages lying in that zone. Your 20-day moving average, the 50-day moving average, the 40-day exponential moving average, and the 50% retracement of that entire 1,000 point fall, and that has clearly happened in today's market. We did not even get to 22,300. We just fell short about 3 points off it. Nifty made a intraday high of 22,297, reversed course from there and has corrected by over 100 points in the process. It is in the red now. It's down about 0.12% as we speak as of 10:10 a.m. this morning, currently trading just about 10 points shy of the 22,200 mark. Sensex, on the other hand, is down about 0.3%. It has slipped below the 73,000 as well, trading with a cut of about 100 points from that 73,000 mark. But again, when we are talking about resistance levels, let's also talk about what could be the potential floor for the market if the market does reverse course from here on and fall. So from what I understand, 22,000 works out, 22,000 to 22,050 level works out as key retracement level for this pullback. So that could perhaps provide some support for the market in this pullback if we do continue to witness some pullback. But again, one, I think, would not like to see wild movements at a time like this. In fact, they would want the market to consolidate from here on and perhaps see intermittent jumps in the run up to the elections. But again, remember, the market has reversed course. We are down about 0.12%. The broader markets, they are holding on to their gains. Let's see what happens over there. So far, they are trading about 0.5% higher or so. India VIX has picked up once again. It's back above that 20 level. In fact, above 20.5 as we speak, up 1.83% as of 10:10 a.m. What happens next? We'll talk about it at 4 p.m. on Last Check. Coming up next is World Business Report.
Former Union Minister Sharad Pawar, chief of the NCP, has said many regional parties